Okay, today we're going to start 3.1 Purchase Journal, and it's on page 402 and 422 of the textbook. I want to make sure that you have the textbook in front of you because we do need to do a little bit of flipping back and forth to see diagrams. I think I've included all the diagrams on my board, however, some of them are sideways and it might be hard for you to have a look at them. So if you want to get your textbook to help you, you're welcome to do that. So we're going to start talking about the Purchase Journal. And what happens is, as a business grows, they have many entries in a day. And of course, one person cannot make sure that they take care of all of these entries. So we're going to use something called a purchase journal. So if you were to look at all of these transactions here, you will notice that a lot of things are duplicated, like sales, purchases, and cash. If you have a lot of transactions, you're just doing the same thing over and over again. So we're going to introduce another way of recording this. So those are the four here. These are the four main things or categories. And these four things represent a majority of the transactions in a business. So in a special journal system, separate journals are used for similar transactions that are repetitive. For example, a purchase journal is used to record all purchases on account, which are credit purchases. A sales journal is used to record the credit sales. Cash receipts and cash payment journals are used to record cash received and cash paid out. In addition, a general journal is used to record transactions that do not fit into these major categories, as well as the end of period adjusting and closing entries. Different people might record the transactions in each of the special journals. Thus, the 5-journal system could make use of the principles of division of labor. So by dividing things out, it gets people to specialize, and it makes your employees more effective. So here's just a summary of the major categories of transactions and the source documents that go with each, and the journals that you are going to be using. So you can refer back to that if you need to. You will find that operating the 5-journal system is not difficult once you master the concept of channeling routine transactions into new special journals, rather than recording everything in one journal. In this chapter, we will examine the use of each of these specialized journals listed above. You will find many similarities in journalizing and posting procedures for these journals. Okay, so you can have a look at that as well. Okay, so today we're going to start with purchasing systems. The first special journal you will learn to use is the purchase journal. Before you examine the recording and posting procedures for a purchase journal, it is important to understand the purchasing system as a whole. Many documents and company departments are involved in a purchasing system. This is necessary to divide the workload among a number of people and to control human error and possible dishonesty. Purchasing systems differ from business to business, and the textbook uses Pan-Canadian Sports Equipment to help us figure this out. So when you're ordering goods, there's a purchase requisition saying this is what I want to purchase. Then there is the purchase order. You go ahead and actually purchase it. It's sent to the supplier. The supplier ships the goods to you, and you receive a purchase invoice once you've received the product. So this is an example of what a purchase requisition would look like. This is just saying what the department or what the people want to purchase. It's not actually an invoice or anything like that. It's just what are we looking to purchase. Then you would get a purchase order. It is the responsibility of the purchasing department to acquire the best quality items at the best price. When a supplier has been selected, a purchase order is prepared by the buyer and sent to the supplier. When both the buyer and the seller agree on the terms of the purchase order becomes a legal document or contract. Okay, and there's different amounts of copies of each of these purchase order. The supplier gets a copy, the receiving department, the accounting department, the purchasing department, and the requesting department. So you can see that one purchase order is actually very important. It goes through a lot of different hands. After goods have been shipped, the seller sends an invoice or bill to the buyer, and this is what an example of a purchase invoice would look like. Okay, and it tells you the date that things were ordered and the amount and the HST or the PST or GST. The information in the columns headed quantity ordered, quantity shipped, stock number, description, unit price, and amount must be carefully checked and is subject to further detailed controls in Pan Canadian Sports Equipment's purchasing system. So we have to make sure that everything is right there. Now, up to this point, the system for ordering goods from a supplier has been shown. The steps to be followed in receiving the goods and the procedures for paying for them will now be discussed. So, a receiving report. Merchandise received from a supplier must be checked to ensure that the goods received were actually ordered, the goods are in satisfactory condition, and the correct quantity and quality were shipped. The person who receives and checks the goods completes a receiving report and sends a copy to the purchasing department. Remember that a copy of the purchase order was sent to the receiving department when the goods were ordered. This purchase order copy is used to determine the goods received were in fact ordered. Okay, so there's a copy there. Some firms do not use a receiving report. Instead, the receiver will check off each of the items. So if they don't have the receiving report, they'll just check off the items on the order to make sure that everything was received. Before an invoice is approved or recorded, a matching process occurs in which the invoice is checked and compared to the purchase order and the receiving report. This comparison is necessary to ensure that what was ordered was received. And an approved invoice. The accounting department receives the invoice and supporting documents from the purchasing department and checks their mathematical accuracy. Each extension or calculation of quantity multiplied by the unit price is checked and the amounts were added to verify the total of the invoice. The account to be debited is indicated on the invoice. An accounting clerk then journalizes and posts the transactions. And after journalizing, the approved invoice is placed in a date file to be processed 3 business days before the date on which the payment is to be made. They have to give them a few days to actually get there, so it's not considered to be late. And the journal entry would look like this. Okay, so here's just another flow chart to go through all the process of the purchasing department. So as you can see, it's quite a detailed process. Okay, so now we're ready for the purchase journal. A business that makes many purchases on accounts uses a purchase journal instead of a general journal to record these transactions. General journal, we did that in grade 10. When invoices are received, they are checked and approved and then recorded in the purchase journal. So you got your invoices, they're approved, and then it's ready to go in the purchases journal. Okay, so as you know, an invoice received for its items purchased on account is called a purchase invoice. After the purchase invoice has been approved, it's journalized. So on September 5th, the accounting department of Pan Canadian Sports Equipment received invoices for the following transactions. Now we're not going to go through all of these. In the old system, this is what they would look like in your general journal. Now in our new system of using the purchases journal, it's going to look like this. Now, I know that it's sideways, and I'm just going to find that page in my textbook so I can tell you guys. It is on page 414. I just put it up there sideways. I couldn't fit it to go the other way. Okay, that is what a purchases journal looks like, and you'll see now that everything has different columns. And these transactions now, if you go and you look through them, are all placed here. For anything that doesn't have a special column, you can use this other accounts column. And if the important thing is though, is that if you're putting stuff into the other, you have to tell what accounts they're going into. Okay, these ones are all special because they're already named and you're using them. Sorry, I'm working sideways here. Okay. Okay, and I think you've got that. Now, balancing the purchase journal, because everything's put onto one form, sometimes it might be easy to make mistakes and you're not sure if you've got everything balanced. So if you look at page 415 of your textbook, it shows you a complete special purchase journal, and it shows how things are underlined. So single underline shows that everything is being added, and a double underline shows that everything is balanced. Okay. Now, on the left-hand side at the very bottom, you'll see where it says debits and credits. Your debits always have to equal your credits. And if they don't, then you know that you need to go back and figure something out. So that is how you would total and balance your purchase journal. If you have some errors, the first thing you have to do is start the first line and check to see if there's equal debits and credits. And if they don't, recheck your addition. And if not, then you need to kind of go back and go through each transaction and see if maybe something's put in the wrong column, or if you've got numbers that are mixed up, like 14 you've recorded as 41. Okay? And then posting to the ledgers, the main advantage of the purchase journal is that you don't need to post every single transaction. What you can do is you can post just the totals. And I think I've got that on page 418 if you want to have a look at that. And so as you're looking at that, there's two methods of posting. One's called direct posting and one is posting from the journal. The direct posting method requires that source documents be posted directly to the subsidiary ledgers. Different people can be assigned to journalize transactions and update the subsidiary ledgers. A company with a large number of transactions involving customers and creditors would use this posting system. Companies with a multi-column purchase journal usually use this method to record source documents in the subsidiary ledgers. Purchase invoices are recorded directly into the accounts payable ledger. Sales invoices are recorded directly into the accounts receivable. Division of responsibilities made possible since different accounting personnel can be used to perform these tasks. Another posting method is to enter transactions in the journal and then to post the entries from the journal to ledger accounts. This method is often used by companies that may wish to use special journals but do not have enough transactions to have different people working on the journals and the ledgers. Okay, so if you read through here, and it tells you on page 418, it'll tell you how things are posted. And if you look at page 418, you'll see at the end of the purchase debits column, you have a 500 in brackets, and then 206 in brackets, 200 and 615. The reason why you have those is because in those ones, you don't have to post all of the transactions above it. You only have to post the total because everything's going into the purchase debit column. Same thing with the HST refundable debit, the accounts payable. You only have to post the totals. You don't have to post everything. However, if you use the other accounts on the right-hand side, you'll see that you need to put some information into the supplies account. That account number is 125. That's why there's a 125 there. Car expenses, 613. So anything in the other category has to be going and posted to the appropriate account. Okay? And here, same thing, it just tells you what to do at the end of the month when you're doing this, at the end of the day as well. So I think that's something that you can probably just go through at your own leisure. And also need to remember about what credit invoices. Occasionally a buyer will return goods to the seller. This causes changes on the books of both the buyer and the seller. The source document prepared by the seller as a record of a return of goods is a credit invoice. The seller prepares the credit invoice and sends it to the buyer. The seller decreases the amount owed by the buyer, and when the buyer receives the credit invoice, the buyer decreases the amount owed to the seller. Okay, so it gives you 3 steps here of recording your credit invoices. Credit invoices may be recorded in the general journal. This method will be used to complete the exercises in this chapter. Okay? Credit invoices may be recorded in the purchases journal. The circling method can be used for special columns can be set up in the purchase journal for purchase returns. Or a special account purchase returns and allowances may be used to record returns. A purchases returns and allowances account will be used to complete the exercises in this chapter. The following sample transactions will be used to illustrate the recording of credit invoices in the buyer's books. Okay, so it goes through them there as well. Okay, yep, and let's see what else. Okay, then there's 4 advantages of using the purchase journal. Most entries require only 1 line, posting is reduced, explanations are eliminated, and divisions of labor and responsibility is possible. So whenever we can save time, we definitely want to.